Hello everyone, I hope you all are doing very well. And here in this session, we are going to discuss about RSI, that is Relative Strength Index. In just our next lecture, we will discuss about MACD and then we will discuss RSI versus MACD with the help of numerical problems and real world applications. So let's begin. Basically, whenever we talk about RSI, it is a relative strength index. Basically, it is a momentum oscillator or momentum index or momentum indicator, you can say, which measures speed and change of price movements. So whenever we work in stock market, basically there is a instantaneous price movements, right? So to just check out the speed and change of price movements, we can use the technical indicator, that is RSI. It range from 0 to 100 and typically it is used to identify overbought stocks and oversold stocks, or overbought condition in a market and oversold condition in market, right? Now, if we want to calculate it, then for calculation of RSI, there is a very simple formula, that is RSI equal to 100 minus 100 divided by 1 plus RS, where RS is relative strength. Basically, it is average gain of up trades during the specified time frame divide by average loss of down trades during specified time frame. So whatever time frame we are going to work here, so average gain divide by average loss over that time period, right? Now, typically RSI, that is relative strength index, calculated over 14 period time frame. Basically, we can use 14 days stock price and then we can work on it. And formula for relative strength involves smoothing techniques to average out gains and losses, right? Now, suppose we have the closing price of a stock over 14 days as follows, like this, and we want to calculate relative strength index to determine whether this stock is overbought or oversold. Then step by step, let's begin. So basically, the step one for calculating relative strength index is we need to calculate daily change. So for daily change, it is closing price. So 46 minus 45, that is plus 1, means it is gain. Thereafter 47 minus 46, that is also plus 1, that is it is gain. Similarly, 44 minus 47, that is minus 3. That is minus 3 here you can see, that is loss, it is loss. They are gains. Similarly, we will work on all this data and we will get some gains and some losses like this, right? So we need to calculate daily changes first. It is step one. In step two, we need to separate gains and losses. Means if it is gain, separate it like 1, 1. If it is loss, make it 0 here, 0, 0, 0. Gain 1, 1, 1, 1, 1, 1, 1, right? If it is loss, then 0, 0, because it is plus means gain. So here it will be considered as a 0. Minus 3 means 3, 1, 1, 2, and all are gains. So they are going to be considered here as a 0, 0, 0, 0, 0, 0, 0, right? So we need to separate gains and losses. I hope steps are clear, right? Let me revise it. First, we have calculated daily changes, 46 minus 45, 47 minus 46, 44 minus 47, 43 minus 44, 42 minus 43, likewise that. And then we have calculated gains and losses. We have separated them, right? After this, in step 3, we need to calculate average. So average of 1 plus 1 plus 1, 1, 1, and we need to divide it with 14 because the data is about 14 days data. So here the average gain is 0.5. Similarly, we need to calculate average loss as well. So here 3, 1, 1, 2, but all other are 0. But the data is of 14 days. So divide it from 14 and we will get average loss as 0.5, right? This is step 3. In step 4, we need to calculate RS, that is relative strength, which we have discussed, average gain divided by average loss over that time period. So 0.5 divided by 0.5, that is 1. So the relative strength we got is 1. Now just use the simple formula in step 5, that is relative strength index 100 minus 100 divided by 1 plus RS. Just substitute the value and we got the answer as a 50. What we got? We got the answer as a 50. So what it interpret? So basically, if the relative strength index score is above 70, it indicates that the asset might be overbought or and due for price correction. And if the RSI, relative strength index, is 30, then it suggests that asset might oversold or it could be due for a price increase, right? So this is the thing. And in the case of divergence, so divergence between RSI and price movement, that is price making a new high, but RSI is not following, means price is continuously making new high, but relative strength index is not following this. It means that there might be a chances of potential reversal. So in this problem, we got RSI score as a 50. It indicates that a neutral state, means the that particular stake is neither overbought nor it is oversold, means it is in its neutral condition, right? So this is how RSI used to indicate whether the stock price or market is overbought or oversold, right? In the next lecture we are going to discuss about MACD, that is moving average, convergence and divergence with the help of real world application and numerical problem. So do stay tuned, subscribe the channel and don't forget to like the video. Thank you so much guys. Stay tuned.